White sand beaches, clear blue water, palm trees, and the pure feeling of tranquility. Today we're doing a summertime layover in a piece of paradise called the Caribbeans. And yet this paradise is in peril. Climate emergencies, over-indebtedness, and financing problems are some of the many issues that affect the region's economies, which we will delve into in this new edition of Éco TV Week. The Caribbean community comprises more than 700 islands divided amongst 13 sovereign states and 17 overseas territories, with affiliations to France, the UK, the US, and Holland. Most of the economy's engines of growth revolve around tourism, offshore specialized financial services, agricultural, and fisheries. But some economies also boast a sizable industrial sector. That is the case of Puerto Rico, with an important manufacturing sector, in particular in pharmaceuticals, as well as in Trinidad and Tobago, which has an energy industry as an oil producer and large exporter of liquefied natural gas. The countries of the regions have contributed comparatively little to global CO2 emissions at less than 1%, but have been amongst the most vulnerable to the effects of climate change. The IMF estimates that the economic impact of climate change has been 6 times greater than in the rest of the world. Hurricanes represent a significant threat to the region, capable of wiping out the equivalent of almost a year worth of GDP in matters of hours, a threat that is all the more acute given that the region is 7 times more vulnerable to that type of risk compared to the rest of the world, and that hurricanes are becoming more intense. To take stock of some of the climate emergencies that these economies are confronted with, we can project 4 global scenarios for global warming. If temperatures rise globally in the range of 1.5 to 4 degrees Celsius, water levels could rise in the range of 3 to 10 meters, thereby posing over the next centuries an existential threat to some of these islands, especially given that 65% of the population in the region lives less than 3 kilometers away from the coastline, and that 1/3 live less than 10 meters above sea level. Rising sea levels, in addition to their effects on coastal erosion, will lead to greater infiltration of salt water into groundwater, which, in addition to more intense drought, will lead to a lack of fresh water for both inhabitants and agricultural irrigation. To adapt to climate change and increase their resilience, the economies of the Caribbean need to make significant investments, estimated $100 billion by the IMF. The issue is that many face financial constraints, driven in part by the fact that local debt markets are shallow, but also that growth profiles tend to be weak and also erratic, with recoveries that are hampered by climate events. This tends to weigh adversely on debt dynamics in a region that is already heavily over-indebted, which overall complicates access to global financial markets. Currently, 6 out of the 10 most indebted countries in the world, relative to the size of their economies, are in the Caribbean, and the COVID-19 crisis has further exacerbated these debt problems, given the regional economies have on average experienced economic contractions that have been 3 times larger than the rest of the world. So what sources of financing will these economies be able to rely on? One possible option would be to increase the availability of funding to international as well as regional financial institutions. However, these sources seem insufficient at present, despite the rolling out of new financing programs. Furthermore, many Caribbeans currently do not have access to low-cost concessional finances due to their middle income status. Other financing options are based on the enhancement of North-South solidarity mechanisms that have been the subject of intense discussions during the late summit for the Global Financial Pact held in Paris in June. Some of the options proposed there include new debt relief mechanisms, as well as the reallocation of IMF special drawing rights, in addition to an increase in development assistance emanating from rich countries, as well as new taxes on CO2 emissions in the aviation or maritime transport, as well as a financial transaction and the extraction of fossil fuels. Other innovative options have also come from the debt markets, and we've seen the emergence of promising solutions in recent years, taking advantage of investors' appetite for ESG-type investments. That is the case, for instance, in Belize and Barbados in 2021 and 2022, 2 countries that have engaged in debt for nature swaps, which have allowed them to redirect funds that would have otherwise gone to debt servicing, to go instead towards sustainable development projects and marine conservation. We've also seen other countries issue blue bonds backed by supranational entities. For instance, the Bahamas in June of 2022 has emitted and has been able to access market finance at lower cost with a guarantee from the Inter-American Development Bank. We've also seen countries such as Barbados and Grenada, in their debt restructuring in 2019 and 2015, respectively, include suspensive clauses allowing them to suspend debt repayment in the event of climate events such as natural disaster, but also as well pandemic risks. Jamaica in 2021 has also issued through the World Bank a CAT bond, or catastrophic bond, allowing it to insure itself against hurricanes over a period of 3 years, thereby increasing its financial resilience during that period. And finally, one potential future source of financing could emanate from the sale of blue carbon credits. Many economies have in fact seagrasses and mangroves that can capture and store hundreds of millions of tons of greenhouse gas in a much more efficient way than tropical forests. By mapping these underwater meadows via satellite images, many of these economies could eventually sell carbon credits with 3 objectives in mind. First, to have access to funding to better enhance their resilience. Second, to allow countries to offset their carbon footprint, and also to have access to funding to protect its marine flora, which unfortunately disappears every year. This market, which is still at an incipient stage and is still quite controversial, has been estimated at some $50 billion in the Bahamas. That's it for me. Thank you for your attention, and see you in September for a new edition of Eco TV Week.